Oil near $50 and Argentina suspending corn sales. Some weather issues and forecast for 2021. All of that discussed with Mike Zuzolo, President of Global Commodity Analytics, right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So, Mike, I think we can start from with the Argentina issue. Argentina is suspending corn exports, and they have nearly 4 million metric tons to export. This measure aims to avoid shortage in the domestic market, and I can assure you that the Argentinian farmers are really pissed right now. Oh, what do you think are the market effects?
Well, we've been waiting for the corn market to play catch up with the soybeans for probably about 2.5 or 3 months, Luis, and we're starting to find the demand side coming on pretty strongly in the corn market, while the supply side continues to be questioned, especially in the Argentina market. And what this announcement did for the Chicago futures trader was to make him acknowledge and make her acknowledge that Argentina has a significant problem with their corn production potential now, because they're well past their main pollination phase. And as they get into January, a lot of their crop will be, and almost all of it, in fact, will probably be in grain fill, and a lot of dry weather still ahead, and a lot of 100-degree temperatures in the Pampas regions that we're seeing right now at this time period heading into the new year. So I think it was an acknowledgement that the crop problem is real enough that they're going to shortcut their export forecast, and USDA is going to have to deal with that in their January crop report now. So USDA came in 1 million tons light on the last report. I think they're going to have to cut it at least 1 or maybe 2 million tons more this go around. I think we're probably still at a 45.5 to 46.5 crop. I don't think it's much better than what we had a few years ago when they had a drought. And it could go lower. I really think it could be as bad as what we've seen in a decade down there from the maps and the models that I continue to track with. The second thing that this did, I think, was give the USDA forecasters the need to cut. And at the same time, they're going to have to, the trade is going, the Chicago futures trade is going to have to ration demand, because they know the United States is the only game in town. And this makes the Ukrainian shortfall in their crop exports year to date. I think they were down another 4% or 20, it was either 4 or 14%, I think, in the month of November in terms of their grain exports on the month of November versus the prior month. So we're the only game in town for export pace, and we see that in our export inspections, and we've even seen it here recently in our export sales. So corn is picking up. The bean corn ratio is starting to lose, and I think that's fundamentally justified, because the market is, if the beans are going to go up, I think the corn needs to follow it at this stage.
Yeah, another factor that could be important for corn is that crude oil got nearly $50 a bushel in the last week of the year, and the ethanol production has reached the lowest point in the last 2 months. So, do you think how big do you think that this factor is?
It will be big eventually. We're rationing demand. I mean, and when we see what the cash meal has done, if we look at global prices, the Rotterdam price, the U.S. Gulf price, the Brazil and Argentine prices, they've essentially gone straight up this last 30 days, and that's due to the bean price action. And when you take a market straight up and parabolic like we are right now, history would suggest strongly that you're cutting demand off at the knees. And as you say, the ethanol production's going down, and yet we're hitting a 7-month high in stocks build here in the recent update on the weekly numbers here earlier this week by the Department of Energy. And I just got off the phone minutes before we got on with our Zoom call here. Just got off with a client I've literally dealt with since I first got into brokering in 1995. He's raised hogs from farrow to finish, breeding sows all the way to finishing them ever since we've known each other. And he's one of the very few clients I have left. It's a farrow to finish hog producer. And he just got off the phone prior to talking to me with his breeding inventory fellow and said, stop breeding sows January 1. That's because of the meal price. And he said directly, now I can sell my corn off the combine or sell it for, early sales in a month or two for off the combine sales. We are rationing demand. I think this is what's being overlooked by the bulls in Chicago right now. But why should we be surprised? This is how the market works. We get heavy on one side of the boat, and then we get heavy on the other side of the boat. We very rarely in a commodity market, especially the grains, get into a logical trend line 45-degree market higher. It's always straight up or straight down, it seems to me.
Yes, and this year you have talked a lot about the sell and defend strategy, and it seems that 2021 will have a tough start, but I think that little by little we are getting rid of this pandemic. But some prices continue to increase. I just read some news that the fertilizers prices could increase from 5 to 9% next year. So, do you still recommend the sell and defend strategy?
Yeah, without a doubt, and that goes back to the idea that whether and the supply side can continue to fund or fuel the supply side weather bull that goes straight up. And there will be corrections. And what I did this past week in my 2021 soybean outlook, Louise, was try and give updated real-time production estimates for Brazil, Argentina, Paraguay, and the United States for new crop, thinking that the bean acres here in the United States are going to be almost identical to the corn acres at somewhere around 89 to 90 million acres. But we are pulling bean acres out of corn acres based upon a poll I took with my clients. Overwhelmingly, they're doing that right now. And so what I did was, because of this weather market and because of what we're seeing with the front end soybean futures right now, going up towards $13.25 a bushel as we go on the air here, with the next target being the August 2014 high of about 13.35. That's our next technical resistance. I laid it out very simply. I've got two overvalue levels in November 21 soybeans. Without a drought here in the United States, 1120 is my overvalue. If we have a drought here in the United States, 1220 is my overvalue, with the idea that we could go up in new crop beans to wherever this current rally takes us in the old crop futures, just depending on how long this weather market lasts. And that's why no one knows how long the weather market's going to last. And it was just a week or two ago that the Bureau of Meteorology in Australia said that La Nina may be peaking in January. What happens with the Argentine port strike over with, the stimulus checks not getting bigger, and then the La Nina peaking when we come back after the January 1st holiday, and if we don't get a bullish report from USDA on January 9th or 10th, when that WASDE report comes out. That's why the sell and defend model, I think, works so well, is because you're locking in extremely historically good profits. You're leaving your upside open by defending it, but you're not playing it as a speculator. You're hedging for profit. You're putting some money back on the table to see if this market continues to rally, because no one knows when the La Nina ends and if the U.S. crop growing season is going to go smoothly or not.
Yes, and this week soybeans reached the $13 level. And do you think that it can go even higher? Because some months ago we was speaking about 11 and $12, and it was tough to get until this level. So we are here with 13. What about 14?
Yeah, good question. I mean, the key that we talked about the past couple 3 months was, I didn't feel like that the beans could get above $12 before Thanksgiving, and that it needed the wheat and the soy meal markets. And we got past Thanksgiving. We had a couple new fundamentals that came in. The weather stayed dry. The biggest thing was the weather stayed dry in northern Brazil and in most of Argentina. And then the port strike hit, and then the stimulus bill hit, and we got past the Thanksgiving holiday. And so heading into Christmas, it was not hard to see that we would go up to $12. Now, I will say from 12.60 to where we are right now, this last 60-cent rally, I did not think we could get to this price level this quickly, and that we would have to wait until we got into January, February at that stage of the game. But we did get the meal on our side. I would say, however, the meal is starting to work against us at this point in terms of the cash global meal price. I would say the Brazilian cash price of beans, the Argentine cash price of beans, and the U.S. cash price of beans are all relatively close together. So there's no discount anymore in the United States price. The currencies continue to work in favor of U.S. exports, but not as much as it did 60 or 90 days ago. Lastly, I would say the wheat market, it has broken out to a multi-year high, but it has also started to go back towards a more channel-like look to it. So I think we're where we were 2 months ago. Beans need the meal and wheat to go higher, especially if USDA doesn't feed the bull after the report. The last thing I'll say is my model right now, if I'm going to be wrong, I'm trying to track it with my clients very, very well, because that's why I do independent analysis. It's as important to me to know why I'm wrong as to know why I'm right. And I'm looking at the 2007, 2008 model year for soybeans. We started out in August of 2007 at about 840, almost exactly where we started the rally this time. We went 8 straight months higher and then had a big correction on month number 9. January of this coming year of 2021 will be month number 9. And we have had 8 straight months of rally this time around. So I'm not betting on a January correction, but I think the likelihood's very, very high.
And in terms of the meal, this year was characterized as the meal that Argentina used to export was stocked, and Brazil and the United States had compete to get this market, and eventually they had a lot of exports. But do you think what would happen with soybean meal in the next year?
Well, I think what we're going to see, because the Hogs and Pigs report here in the United States really showed us what was happening, and it was really met with anecdotal evidence from my clients before the report was even issued, that there's a lot of disease pressure in the United States hog herd, especially the breeding side of the equation, the sows. And in the Chinese market, we found out that the gilts, they've rushed gilts into breeding, and they have not withstood disease pressure very well. And so I think while you have continued soybean demand because you continue to try and rebuild the herd in China, it's not going to be as big a demand as what I think we presently think it will be. And in the U.S. herd, we had all 3 major categories, all hogs and pigs, breeding, inventory, and marketings, all below 100% in this last report about a week or so ago. That says to me that we are starting to tighten up our supply numbers. So whether it's poultry or pork around the world, I think these meal prices that we're at right now are seriously hampering demand, and we are going to see a lower demand base. I'm going to cut exports and soybeans and meal crush here in the United States by about 3% for my 2021 estimates. That's kind of what I'm looking at compared to this past year, is about 3% loss in demand in both those categories. I end up with the U.S. carryover of about 230, 250 million bushels, establishing the idea that we don't have any drought issues.
Yeah, talking about the weather, we have also talked a lot about wheat this year. We have seen several rallies, and right now there are some adverse weather forecasts for the southern plains of the United States, in states like Oklahoma, Texas, and even your great state of Kansas. Do you think that will have an impact on wheat prices?
I think the market is assuming that a pattern shift is occurring at this stage, Louise. But if the current weather models push the vast majority of the precipitation south and east, it's going to be pushed out of the hard red wheat belt and still give the soft red wheat belt a very good amount of precipitation that will carry it all the way through until springtime when we break dormancy. I mean, we're looking at 5 to 6 inches of liquid precip in some of the key areas of southern Illinois and Arkansas and southern Indiana, where the real strong presence in western Ohio, or the real strong presence where the soft red wheat is grown in the United States. But it looks like it's going to miss the vast majority of central Kansas, on west into Colorado, on north into Nebraska, and the very big sliver of Oklahoma that grows a lot of wheat, and also the Texas Panhandle. So while this looks like a pullback to me, I think that we still have very much a weather issue as we go into springtime if we can't build precipitation and soil moisture levels any more than we already have.
And what do you see for more of a longer term prospect for wheat? Do you see that will be a start and it will continue above corn for the next months?
Yeah, I think corn is going to have to buy acres. And so I could see an area here where the wheat market, unless Russia comes out with some major changes that tightens their supply and their exportable product even more, I could see where the corn tries to gain on the wheat as we go into corn planting in March, April, May. But after that, I think the wheat has to come back around and take over as the leader as we break dormancy. I think this could be one of those years similar to 2014 or 2010, where Russia's having a much worse time holding on to their domestic supplies and not growing as big a crop as they need for the next crop year and for their next marketing year for the demand side, as their ruble continues to break hard to the downside. Their inflation is getting very strong in their domestic prices, and I think their food issues are getting worse and worse as far as people being able to afford food at this stage of the game. So I think ultimately the wheat market in the next 4 months, 5 months, probably will be strongly dictated by what Russia does.
And what about the Baltic countries?
Ukraine appears to be getting a little bit more moisture than Russia, but they are still on my watch list. And I would say China is still on my watch list. I'm getting more and more anecdotal reports and evidence that maybe the Chinese are very tight on corn supplies and that they drew down their strategic reserves too much. And they may actually start to have to increase some of their buying as they go into the summertime if they don't have a good start to their crop year.
What's your forecast for the alternative crops during the next year? We have a year that wasn't really bad for the alternative crops. What do you see for sorghum and other
Yeah, I mean,
crops?
sorghum will be a player where the wheat crop is bad and the if the corn price doesn't rally. I think soybeans take a lot of acres away from the cotton and potentially away from the sorghum if they maintain these price levels heading into February, March, and especially if the delta is wet, the southern parts of the United States where the cotton is grown, if it's wet early, say as we go into March, they'd want to be getting some cotton planted. They may have to switch to beans. I think what I want to lay out for the producers this year is it's going to be relatively easy for any delays in planting, no matter where you are in the northern hemisphere, to move to an oil seed, whether you're talking about canola in Canada against not planting spring wheat, or whether you're talking about soybeans in the southern US and the cotton areas, or whether you're talking about France going after more oil seeds instead of wheat. If they have any planting delays, it's going to be very easy for soybeans to garner more acres here in the world this year.
Well, you mentioned a lot about the hog market, and what about the other livestock markets? What do you expect?
Well, the cattle market, I'm still on track with hedging where we are right now at this 119, 120 level in the April fat cattle, because that's literally about $6 or $7 higher than USDA's forecast of 113 for the second quarter. I'm stopping my hedges there in the cattle though, Luis, because I feel as though, generally speaking, the first half of 2021 calendar year should be good for grains. The second half, the supply drops in terms of both the herd size in cattle around the world, and also the weights should start to drop because of these high grain prices. And so I see the second half of 2021 being a better marketing time period for the cattle producer and rancher. So I don't find the June on out to December contracts of fat cattle really appealing or enticing me to want to hedge right now. I did on a daily video just yesterday, and please be sure to sign up for a trial after we get done talking. To any of the listeners out there, sign up for a trial. If you get down to about 135 in feeder cattle, because they're getting pressured so much by the corn market right now, I think in the next 45 or 60 days, feeder cattle might actually be a pretty decent buy as long as you use a very tight stop.
During the COVID-19 pandemic, we had a lot of shift of consumption from beef to chicken. And do you think that perhaps that is going to revert by the second half of the year with economic rebound?
Yeah, I think that's probably likely because the stimulus bill got passed. If you would have asked me that question today and we had not passed a stimulus bill, I would be telling you that I could see about 600 or 800 restaurants around the United States closing in 30 days. So I think we're hanging on by a thread, but it's not going to be profitable because keep in mind, these meat prices are high right now and they haven't come down because of the pandemic. Anecdotally, I talked to a restaurant here in town. We're not wanting to cook because of the snowstorm on New Year's Eve, and so I called the restaurant and I said, "Do you have any party trays that we can buy?" And they said, "Yes, we have lunch meat wraps, but we can't get any chicken because I'm having a supply chain problem. So I couldn't get any chicken tenders, I couldn't get any chicken wings." Because of supply chain problems due to the COVID. And so I think this is where it goes back to, yeah, we can maintain demand, but it's not going to be as good as we want it to be, even with COVID going away and with the stimulus bill. It's really, to me, about getting supplies down to the point where the demand side of the equation knows they're not going to get any prices any cheaper, so they got to buy it anyway.
What would you summarize for US farmers and farmers around the world for 2021 market
Well,
prospects?
we've forgotten a lot of what we've talked about the last 90 days because of this price rally. We've forgotten the idea that we may have another energy policy shift to green alternative energies, and that may take the fossil fuel energy industry up sharply in price for a while, but then, have a real issue with it later down the road. And that includes ethanol, includes diesel prices, includes fertilizer prices. We've forgotten about the demand side of the equation, Luis, in my opinion. We've forgotten about what has gotten us here, and that's been the weaker dollar, the stronger real, the stronger yuan, the stronger euro currency because of the Brexit trade deal. This is what initially got us into the funds buying. And then the fiscal stimulus came on because of COVID and inflation started to be talked about. Well, that inflation can be pulled out of the market fairly quickly if the economic data doesn't perform when we come back in the first quarter of 2021. So I am a hedger at profitable levels. I love to defend these sales because they're profitable. And then I don't care what the weather does. And I've got my profit per acre and my profit per head locked down.
He is Michael Zuzolo, President of Global Commodity Analytics. Happy New Year.
Happy New Year, Luis, and wish you a Merry Christmas since we didn't get to talk last week.